Hello everyone. Thank you for attending my talk today. This is officially the last talk. So thank you to EAK Digital. Thank you to Aran for organizing this amazing event. I've met lots of good people and had a very nice time, so thank you to them. So today we'll be looking at the global taxation of digital assets. It sounds like quite a big thing to go through, but hopefully by the end you'll have a little bit of a better understanding of how taxation is working in the crypto space. So there's 6 things we'll look at: classifications, transaction data, the available solutions, a couple of the laws in different countries, so we'll keep it on a global level, calculation methods, and then a final note from me. So I want to just skip all of the boring definitions because I could sit here and tell you how everything is defined by the IRS or the HMRC. But I want to dive into this form here. This is what we call the individual income tax return, 1040. This is a tax return that every single tax-paying American citizen has to fill out. They do not have an automated system for taxes. Everybody has to fill out this file. So you have to fill out your name, second name, social security number, and then there's this very interesting question here. And it says, at any time did you receive, sell, exchange, or otherwise acquire any financial interest in any virtual currency? And when I first saw this, I thought it was a little bit of a strange way to classify blockchain assets, to call them virtual currencies. It's certainly not a way that many projects in the space like to self-identify themselves. So to change something on this form, it takes a very long time. It takes different agreements between the departments, and it takes a congressional committee just to get one thing changed on this form. So this is in 2020. And as of 2022, they have now updated it, and it has shown an evolution in their classification. So it's the same form, but they've changed the definition. They say, at any time during 2022, did you A, receive as a reward, award, or payment for properties or services, or B, exchange, gift, or otherwise dispose of a digital asset? So they've now removed the word virtual currency, and they've replaced it with digital asset. So it's showing an evolution of the understanding of what the government views blockchain and crypto assets. It also means they're starting to understand DeFi and mining, because rewards and awards are things that come from taking part in decentralized applications and taking part in mining activities. It also shows that they're understanding that crypto can now be used in a similar way to fiat by using it to purchase goods and services. So for example, the New York mayor, he said that he wanted to receive his salary in Bitcoin, and I saw an advert last week for a cafe in Manhattan which said you can buy your lunch and coffee in Bitcoin. But obviously these are things we're aware of. Crypto assets has been used in a way for fiat to pay for goods and services. And then B, have you exchanged, gift, or otherwise disposed of a gift or digital asset? So exchanging and selling, these are basic actions that can happen through trading, through CeFi, DeFi. And then gifting, so this is like donations. I know there's many charities around the world that are now accepting crypto assets as a form of a donation. So this is good. This is good news. They're understanding more things about what digital assets are and how they can be used and the different ways that they can be used. So we have traditional assets on the left-hand side and we have digital assets on the right. How are these two things taxed? So traditional assets, stocks, shares, bonds, property, collectibles, precious metals, these are taxed under capital gains tax or income tax. And now they're applying the same thing to digital assets. So for example, if I buy a house in America for $300,000 and I sell it for $500,000, that difference of $200,000 is where I will pay my capital gains. If I buy Bitcoin for $30,000 and I sell it for $50,000, that $20,000 is a capital gain. I'll have to pay tax on that capital gain. So what about income tax? It's the same thing. If I buy a house and I rent out my house, the rent money I'm receiving is income tax. If I buy Cardano or Polkadot and I stake these assets, or I lend these assets out to a liquidity pool, I am then receiving rewards. I'm receiving rent for my assets, so this will now be income tax. So it might seem confusing at first, but actually there's some simple solutions for digital assets and the way the government wants to tax them. So we have the classification, we have the tax. What do I do as a tax-paying citizen? First, I have to get my data. So this is what we call a CSV file. Every time I look at these things, my heart starts to race a little bit. Lots of information. You can have 10,000 transactions, 50,000 transactions. Anyone who is part of an exchange, you can receive this from your exchange. It shows you how much you've bought, how much you've sold it, the date and the time, and all the different kinds of actions. So Coinbase Earn, this will be like a lending platform. Converting will be trading. Sending would be a transfer. Everything is recorded. This is Binance. So I have to say that there is no uniformity in the way these files are given to the user. They're all unique. They're all different. I would like to see some uniformity in these files, that they all look the same, as this would make my job a lot easier. If you've interacted with DeFi, you can go to the Etherscan, BSC scanner, ADA scanner. You can find all of your transactions, and you can also download a CSV. They're not so great, but at least it's something to work with. So I now have all of my data. What do I do? Well, I could go to an accountant. I could give him my thousands of transactions and watch him struggle as he tries to understand what he's looking at. There are so many complex things that can happen in the blockchain: NFT minting, NFT sales, hard forks, soft forks, contract migrations, future sales, shorting, longing, staking, liquidity pools. It's going to be very, very difficult for an accountant to try to calculate how much tax I owe. Almost impossible. If he does manage it, you will probably pay him more money than what you owe in the tax. So everybody knows SaaS, software as a solution. I like to say software is the solution. So now we have crypto tax calculators. So you upload all of the data from your wallets, and it's automatically calculating how much tax you owe on these assets. What is the good things about these calculators? It's able to understand the complexity of blockchain crypto transactions, real-time data aggregation. I forgot to mention, if you go to your exchange, KuCoin or Binance or Coinbase or wherever you're trading, you can go to settings and you can get your API key. With the API key, you can put it into this calculator, and all of your transactions from the day you started trading until today will appear. Automated tax rule application, so the rules of your country will be put into the app. So when you put in your transactions, the rules are automatically applied, and how much tax you owe is already automatically calculated. Consolidation of complex data, tax optimization. So I recommend everyone in this room to use a tax calculator, because in its fundamental form, it is just a portfolio tracker. It's checking how much you made, how much you lost, what you're good at, what you're not good at. So it's a very nice way to see your portfolio, see what you've made money on, and to control your investments. So this is the process. This circle in the middle is the biggest, because it's the longest part of the process. This is easy. We can get our data. We put it into a tax app calculator. You try to organize your transactions. You can review with an accountant, and then you submit to your tax authority. So it seems confusing, but this is the process, 4 steps, and you can get it done. So just to give you a visualization how it's working. Fiat to crypto. So I can buy £1 million worth of crypto, and I can never pay a penny tax. There is no issue with buying crypto. It is when you dispose of the crypto. It is when you sell the crypto, this is where the tax is being triggered. So I bought a little bit of Link. That's fine, there is no gains on this transaction. But later, when I sell the Link, it's triggering an $84 profit. Why? Because the Link has gone up since the time I acquired this asset to the time I disposed of the asset. Crypto to crypto, so I bought a little bit of Bitcoin. I've traded it for AGIX, but this is triggering a loss because the price of Bitcoin has gone down on the day that I sold it for AGIX, so it's calculating it like this. This is an NFT trade, so I bought this NFT quite cheaply. I've put it onto OpenSea. Later I've sold it for 9 Ethereum, so I've bought it for 7,000 and I've sold it for 33, so that's a 26,000 profit that I'll have to pay tax on. Income, so this is income tax. Rewards, mining, and airdrops. So these rewards are from taking part in staking with Cardano. This is the Casper network, mining on the Casper network. You can have rewards coming like this every day because you're mining. And this is an airdrop. So some countries, they will say, the airdrop is not taxable. And then other countries will say, if you have done something to acquire this airdrop, if you have taken part in some kind of Twitter event, you have bridged your assets, wrapped your assets in attempts to get this airdrop, then there has been a meaningful action of you trying to get the airdrop. If I just wake up one morning and there's an airdrop in my account, this is not taxable. I didn't do anything to try to get the airdrop. So there's always like different interpretations with different countries. Transfers, this is a common one. People ask me, why is there a profit on my transfer? I didn't do anything, I'm just transferring some crypto to a different wallet. Why is this capital gains? The reason is, you've disposed of a gas fee. You have spent a little bit of gas in able to make this transfer. You've acquired this Ethereum at one time, then you're disposing of it, and then the difference between the day you acquired it, the day you disposed of it, this is where this gain is coming from. But usually transfers between your own wallets is tax-free. There's no tax on these. But to someone else's wallet, it is taxable. I just want to, this presentation is only 20 minutes. I would love to go around the whole world and give you more of a breakdown, but I'll go through some countries with you that I find interesting. France does not tax crypto-to-crypto trades. They are non-taxable events. And I had a client come up to me and say, Aaron, this is great news. I'm never going to have to pay tax again. And I said, could you explain to me how is this so? And he said, I'm just going to do crypto-to-crypto trades. I'm never going to sell my crypto into fiat. I'm going to put all of my crypto into USDT. I'm going to go to an OTC counter, give them my USDT, and they'll give me cash. And I said, sir, I'm sorry, but you'll still have to pay tax, because once the USDT leaves your account, this is a disposal. So anytime crypto leaves your possession and goes somewhere else, it's a disposal, and a disposal is taxable. It's a flat rate of 30%, and there is a progressive scale up to 45%, which is the same as the UK. Now the UK tried to call itself, or is calling itself, a crypto hub. They say we are crypto friendly, we're a crypto haven. It's true, they really are trying to understand the technology. They were doing really well until April 2023. They had a free allowance of £12,300. So if you made no more than £12,300, you'd never pay a penny of tax. But now they've changed that to £6,000. And I believe next year they will change it to 3,000. No short-term or long-term advantages. So for example, in Germany, in the United States, if you hold crypto for more than 1 year, it's tax-free. You don't pay anything. But for the UK, there is no such law. HMRC, His Majesty's Revenue Custom, has a data sharing app with all UK exchanges. So it's naive to think that we're able to escape, or they don't know what's going on, the government doesn't know anything about crypto. They do. They're really beginning to understand it, and they're making very sophisticated laws in response. So maybe with DeFi you could try to do something, but definitely with the CeFi, it's pretty much impossible to be able to escape. These are the bands, so up to 50,000 is 10%, up to 150,000, 20%. I've concentrated on Western countries a lot, so I would like to go more global. We move on to India. Now, India has already banned crypto twice, maybe more, I haven't been following, but they've banned it at least twice. And when I read their regulation, the message I get is, you guys can buy crypto, you guys can trade crypto, but we're going to make it very difficult for you. I don't think they're very supportive of the crypto environment in India. So every time you buy, sell, trade, there's a 30% tax. It's not accumulative, it's on every trade. Then there is a 1% TDS, a tax deducted at source. So every transaction that happens on the exchange has to pay 1% tax to the government. And this it's a lot of paperwork, a lot of administration. They're trying to be annoying. They're trying to, impose some law upon the crypto space. Cannot offset losses to following years. So if I lose 10,000 this year, and I would like to take this loss to the next year, I cannot in India. I'm just going to be having to start from zero. And you pay tax on hard forks, which just doesn't make any sense at all. Again, Japan, they should, I think they need a little bit more sophistication. There's no distinction between individual or businesses. So I could be a huge business with a mining operation, millions of dollars in the bank, and trading crypto, and my tax rules is not different from a little trader. So that's quite interesting. Cryptocurrency is viewed as property. So in these other countries like France and Germany and England, United States, they understand it's a digital asset, but Japan is calling cryptocurrency a property, and they're taxing it like a property. The NTA, yet to develop a sophisticated system. Investor was jailed for 1 year and penalized 22 million yen for crypto tax evasion. So that's about $150,000. I also forgot to mention for the Indian exchanges, if the exchanges do not pay the 1% tax, they can also spend up to 7 years in jail. Okay, we just got 2 minutes left. Something interesting that I saw, when I'm reading the documentation for IRS, for HMRC, Australian Tax Office, Canadian Revenue Agency, when I'm reading the documentation, I usually come across something like this. It says the HMRC would like to hear from investors, professionals, etc., in DeFi activities to help them formulate policy. So they're asking people from the crypto and blockchain environment to come into centralized institutions and help them understand better how they should regulate it. Australian Tax Office has begun what it described as a targeted search for comments about potential updates to its online guidance. So this is really interesting. The government asking the private sector and asking individuals for help. What do we do? How do we tax it? Please help us. So this is something interesting that I found. Final note for me about regulation. So with every point, every argument about regulation, there is the people that say we need lots of regulation, we need the institutional money to come in, we need the big players to come, and this is not going to happen unless we have lots of regulation. Then we have people that say we need soft regulation, good regulation. On the right-hand side, people saying, oh, crypto will regulate itself, it doesn't need regulation. And then there's the guy with his shotgun and 2 pit bulls saying, I'm never going to pay a penny of tax, and he's waiting on his farm in Ohio. For me, I believe we need understanding, We need people from the crypto space to be going to government and creating a bridge of communication to be able to understand the crypto space better. I would hate to go to a doctor and he gives me medicine for an illness he doesn't understand. There must be some understanding first. Second is validation. These agencies are validating our space. They are saying, you exist, we understand what you do, and they are interacting with us. That is a good thing. And awareness. I showed you this form at the beginning of the presentation. Hundreds of millions of people have to look at that question. Did I have any digital assets? And they have to tick yes or no. And this is one of the greatest advertisements we could have for crypto. If there is a billboard on the side of the street, it's 50-50. Is someone going to look at it or someone not? But having on the form that hundreds of millions of people is looking at every year, did you invest in digital assets? It's building awareness for our space and bringing conscious minds from centralized finance and institution to us, which is what I call more awareness. That's all from me. Thank you for attending my talk, and have a good day. See you.